All right, good morning, gentlemen. This is Clueless A Trading Frank. It's approximately 10:21 a.m. I appreciate your patience getting this done with those minor website issues that we had, access issues. It's 10:21 a.m. On Sunday, June 10th, 2018. This is the first of the complimentary free advanced coaching sessions, intro webinars for new members. And on that note, I'd like to welcome you both. You know, it's always great to see new blood in at Clueless 8, and I wish you guys terrific trade speed, as I like to call it, and anything as much within reason that I can help um, in achieving that uh, goal. I'll certainly try to do that. So definitely welcome. Um, uh, I always our service is based primarily on referrals. So if you're satisfied with the content that's being delivered and the results, then feel free to pass the word and get a lot of friends and colleagues in there. So um, so I've spoken to you guys both. We've had good conversations on both ends, and you know the basics of what we try to do here at Clueless 8 Trading. So what we're going to attempt to do today is walk through some of the content that I deliver, both on the different formats, on the chart formats, because that's really what we do here, and and of course entertain Q&A within the next hour and change, so that I can at least get you guys up to speed on what's going on. I mean, not what's going on how to navigate a lot of this what I call structured volatility, and what's commonly known as chop in the market, and how you can do what you need to do. There will be one more session that's complimentary, as you know, and then after that, we'll certainly work with you guys on a as you choose to. So, all right. So, first of all, let me walk you through this. So, I use three different platforms for my charting, and one of them happens to be investing.com, which is TradingView. You can clearly see that they're very clear. This is I always highly recommend everyone use it. It's free. It's very iOS friendly. So on your Apple iPhone, the bigger the screen, the better. On your iPad, it shows up very clearly. It's real time data. All you've got to do is just register and sign in. And what do you call? I'm not even a paid. I don't pay for this. You do have a paid service on this, I think, where you get more frills and stuff. But this works great for me. I've been using it for months now. Mary Beth, are you in? Now, before I go any further, one of the things I always mention from a disclaimer standpoint, full disclosure, this is purely for financial education, not for any solicitation or advice. That's pretty obvious. So I use investing.com as one of the platforms, and then we're going to go through the other two that I use, which is Thinkorswim, a platform that many of you use, which I find to be absolutely fantastic, and then finally the one which is what I call the Algo HFT platform, delivered by a company called Quad, QUODD, very specialized company. It primarily serves investment banks and financial institutions, hedge funds. In fact, the show Billions, which you guys know, their screen formats are based on Quad, but the producers kind of funny, but the producers on Billions are such cheapskates. They don't have the live screen, so every time I watch that show and I see the static screens and they're supposed to be a multi-billion-dollar hedge fund, I just laugh. I mean, how stupid is that? They're all staring at static screens, so it's kind of funny. Quad is available to all my members. I have no affiliation with Quad, except the fact that I've been using them for more than 12 years now, since my Wall Street days. And you guys can subscribe to it at a very discounted rate, because a bunch of my members have subscribed to it. I think it comes to about $120 a month, and it's very, very powerful. And the quad signals that come out of those charts, which I show consistently and we're going to go through that today too, are something that you obviously follow my tweets out there, but then you can see the signals appearing and you can act on it immediately. very, very powerful. At some point, if you'd like to do their free trial, I think they give you a 2-week free trial, whatever. And I have a quad training video on my Google YouTube channel. I'll go through that too. Then let me know, and I'll send you their, the link and all that stuff, how you can do it. All right. So on that note, there's you guys all know that all my content is purely 100% delivered on real time on the Twitter real time feed. We know that what that looks like, just like that, and all through the day, all the alerts, breaking news, quick analysis of major events. So get used to this, obviously get used to this format. It's the fastest and the quickest that I've found, and that's why I use it. Then the second resource, which is basically the educational resource, instead of reading long-winded blogs and stuff, is the Google YouTube channel. And that one is extremely important, mentioned to you guys also. And that YouTube channel is... Okay, good evening. We have a great new map. Hate hearing my voice. So there it is. There are playlists here, which you can click, and you can see here there is a new member introductory video. I keep on populating them with the ones which I find, which I believe that new members will benefit from the most. And inside there, there are multiple videos. You can see that on the right, free intro webinar for new members, basic chart pattern analysis. Where's that one? Basic chart pattern analysis. I know you guys. Those are not the ones. I have to look for that. Clueless 8 site navigation video tutorial. Not sure why it's not populating. It's in there. I don't know.
Just went past it.
I just passed it. See, you guys are the best, man.
Yeah, right there where your mouse is.
Right. Oh, intro to chart analysis. Okay, I should just remove the new members. What's this video? Play President Graham Becca interview? No idea. So it's all in there. Free introductory sessions. Look at the ones which are more recent. Certainly don't go through all of them. That's crazy. And this is a good one. Candlestick patterns and sometimes the simplest things are the best. Seriously. I work my butt out on what I do. I love what I do, but basically I'm a lazy guy. I want to get the simple and the most effective way of getting things done. It's always worked for me. So there is what do you call? There is one which is a one from Pinterest that I found, and I put it in there. It says candlestick patterns, and it's somewhere in there, and you guys will see it. And or else I'm going to re-add it. That's fantastic. It's a 15-minute video, gives you the basics on how to read candles and stuff like that. And there are tons of resources on the internet, as you all know. There's fantastic people out there with their 100,000 views. Wish I had 100,000 views. I'm going to get there. So those are great too. So let's stick to this. So this is one format that I use. The second one it happens to be the second one happens to be these ones. 1 second here. The quad, what I call the quad algo HFT charts. I'm going to start shortening my abbreviation, the tweets a little bit by cutting out the abbreviation, tactical trading, and all that stuff because it takes up a lot of my time. I'm just going to basically just abbreviate the writing part. Of course, put the right. If I have any comments and stuff, I'm certainly not going to abbreviate that one. So this is there we go, right there, ladies and gentlemen. Okay, so this is of Thinkorswim. It looks, it's got the same dark background as the quad system, but this is your Thinkorswim chart. This is the long-term chart on, 1 second. That's better. Oops, that's better. That's clear to you guys, Kev? Walter?
Yep, that's
Oh,
clear.
okay, good. Mary Beth, you there? MB?
I'm here.
Oh, perfect, perfect. This
Can
will
you
be
hear me?
I can hear you. This will be a slight repetition of your, I've already gone through this stuff with you because you're a slightly earlier member, but anyway, it doesn't
Yes.
hurt. Yeah. So I'll cover a couple of things. And don't forget that tonight at 8:30 p.m., I would say probably like, around 8 p.m., 8:30, I do and this is for the newest members. I do a very, very strategic, getting ready for the week forecast, all that stuff. By the time we know how the world markets are reacting to the events that happen over the weekend, so I do a live webinar. Feel free to join that. So that's nothing to do with the ACS sessions. So anyway, here's your Thinkorswim thing. So I use this platform for all kinds of things. Swing, the day trading stuff. I don't always use the Thinkorswim, but I certainly do at times. I use the investing.com, and of course I use the quad. So I use a combination of these charts. So this is your Thinkorswim version. Let's look at this is a longer term chart. That's where you're looking at, it's a 1 year chart on one of our more longer term setups, ENDP, Endo International, a stock that we have traded quite a bit in the past years. Revisiting it right now that it's broken out of a major consolidation pattern that took a good solid, took a good amount of time for the entirety of 2018. And this is the type of stock that can, we've played this quite a few times. That breaks out, goes from the $6-7 level, and then shoots up, and you're looking at it, and it's like $15 in about a month. And you're like, well, why wasn't I in it? Why was I looking at it as a day trade? These are not day trades. These are long-term setups, and that's the reason why I've pinpointed very clearly where those initial movements are going to be. And who knows, it might pop up 40%. These biotechs do, and this one did certainly started to break out. And once it breaks out, that's when I start to revisit it again. Okay, so this is your quad. It will always say bar chart, guys. Okay, guys and gals, sorry. It'll say bar chart, and whichever the case, it looks at first glance, it looks like a Thinkorswim chart, but there are some fundamental difference to it. I call it the Algo HFT platform because from my years of using it, and I'm a pretty proficient user of how to read all the signals coming out of this, and I have a fantastic training video on how to read the quad platform and stuff on my YouTube channel. But the simplest way is that I follow the stochastics, the movement and the sensitivity or elasticity of the stows, as I call it. This is the S-stow, which is the slow stochastics primarily, and also I use the fast stochastics. I don't know why the fast stochastic is not showing on this one, but still, the slow stow, when it gives you a signal, especially the crossover right at the bottom, I have consistently, and Mary Beth's been with us about 2 months now, and she's seen it in this short period of time. Once it gets oversold and it starts to have a crossover of the percentage K and the what do you call the directional percentage D, I tell you, you don't need to know anything about technical analysis. You just have to follow it, need to sit with it, and it goes. Okay, so Chipotle is a prime example. This is a shorter term chart. This is a 1 hour chart, right? And Chipotle has been a fantastic winner for us since $280 since the new CEO joined, and we've been consistently trading it as it's moving along the way. Now, as things move along the way, it moves in waves, right? It's not a straight line, but as long as the wave is trending higher, you're going to make a lot of money. So whether you want to buy something 6 months out and say that's it's going to be up at $500, which it looks like it's going to go to by the latter part of this summer, then that's your prerogative. In the meantime, if you want to do short-term trades, you just keep on buying you buy at least 1 to 2 weeks out, and you keep on rolling them over. And these things are very clear to read, and especially on the SPX and the SPYs, it's just a phenomenal platform. Nothing more to say to that. The yellow line here happens to be the pivot. Once it crosses over that, generally you get a surge, and we saw that clearly even on a day like Friday. This big move was good for $10.50. The calls that were on that day, even though I've mentioned the calls in previous, earlier in the week, and then before that. But just as that day alone, if somebody walked in and bought those calls at around $5-6, they ramped up to 10 plus. Not a bad trade. And right now you can see here the way I structure my charts is just not a naked chart, and that's where the value added service comes in, guys, because I'm structuring it in the form of these large large channels, uptrend channels. Then I'm looking at an uptrend line here, all that stuff. I put big fat arrows, which I've repeatedly said to everyone takes up a lot of my time, but I still keep on doing it because it does help a lot of people. If you read the testimonials, you'll see like how many people are benefited from these arrows, uh, and they get there. It got there, and once it hit there, you're a trader, you got to take some profits. It doesn't change the uptrend. The stows are telling you that it's still going higher because unless it goes very, very overbought, you're not going to get a quick pullback. And that pullback alone is also a buyable pullback. But if as a trader, we all want to capture once it hits those levels. We don't want to see our profits disappear and then go up again. We want to just take in the money and then we re-enter, or we take down a bunch of it and we leave a little bit in there, add again at the lower end of the channel, which can happen. It can easily do this. It can easily do this. There you go. And keep them moving higher. Little sellers here, pulls back, and it's going to get to 470. Or it can just bust a move like Chipotle normally does on some sort of big news announcement. Another, they're doing digital delivery, and I mean, they added a second line of production at the Chipotle stores, which is the digital stuff. Then they have delivery now and all that things. They might just come up with a press release and you get this big fat candles. Chipotle is like a big fat candle type of mover, generally speaking. And so one has to know how to read this stuff, and that's in subsequent. I'll cover how to really read my charts deeper in the second free complimentary ACS session. And for people who want to take it to the next level, then certainly feel free to sign up for the 5-pack ACS advanced coaching sessions, as I call it. And it's not just a marketing gimmick. It's excuse me, just having my coffee. It really works. I mean, really works means you understand the methodology of why I'm constructing the way I'm doing. You're going to be far more independent, because that's really my goal. My goal is for you guys to be independent traders where you don't have to rely on every single one of my things, because it's not possible. I know I try to be as real time as possible, but it's not possible to give him minute by minute, blow by blow description. In that case, I should just make all my screens live, and you guys are going to pay me $2,000 a month to basically trade off every single thing that I'm doing. I'm giving you the more shortened format, where I'm trying to share as much as possible, and I do a lot of trades which are which I can't or don't post, because then it's just going to be it's going to be crazy. I just try to put the ones selectively which I feel are going to benefit my members. So okay, so there's your quad format. So now that you have that, you have the quad, you have the Thinkorswim, you have oh, this was phenomenal. So just to give you an example, okay, this IPO came out on that day, which was back on early May. All right, 15, $16. Company called Huya. It's a I think it's a I really I read up on it, and it's got the instinct. I said these guys are going to take this baby up. All right, it reminded me of a Baidu type of thing when they first went IPO years ago, and I told people, tech company. This one is, I think, the video streaming stuff and whatever. You guys can read up on it. Huya, great name. Chinese IPO came in. Market was actually crappy that day, and I think it was crappy. I can't remember exactly. And I said, just buy a little bit. I bought a little bit. I bought a little bit more, and there were multiple charts on this where I showed the arrows like buy. I know I bought the IPO, which was around $16, and then I bought more at around 18, 19. The frigging thing is at Huya right now is trading at, and I mentioned that, at $36 it went to. So the comment that I have, this doesn't have options yet. Okay, yeah, it went to 35.30. So so it went up 140%. And it looks like, based on my structure, that it wants to go to $40.69. And as newer members like Walter and even Mary Beth and Kevin, you're gonna see how precise these charts are. It's going to get there. And this is a swing chart. It's not a day trading chart. Okay. And you can day trade it if you want, because when I told people to buy it, even on Friday, let's say somebody who wasn't with us at that time, that we were buying it, they could have made 2 points real fast, real fast. So anyway, so that's just a quick example of it. And this was the chart on the day that I posted it from June. This was posted on Friday, but this was the original chart that I had posted. Review the original chart. Look at that. And just did I know it was going to go there? Absolutely not. I knew it was going higher. I didn't expect it was going to be a 140% mover in a month, less than a month. That's what happens. These are the sleepers no one talks about, and it goes. So if you have the capability, you can buy 100 shares, you can buy 1,000 shares, whatever your size is of your portfolio, and you can just sit on it. Okay, so we covered the investing.com. We covered the other one that I use, which I do when I'm off my desk. Let's say, for example, I don't sit at my desk and do this. Like I'm off my desk, trading desk, during the day, and I want to show something because I'm monitoring everything literally 24/7. Okay, I'm probably like dreaming tactical dreams, but whatever the case may be, this is off my iPhone. This is off my iPhone 8 Plus. Okay, I'm sorry, 8, the 8 Plus. My son grabbed it, so iPhone 8. And even this is like, you'll see a lot of them. You guys use iPhone, you know that. I'm starting to discover the power of using a lot. A lot of times I'm doing trades when I'm off my desk directly. I'm going to sell something. I'm looking at things, Chipotle's up 10, boom. I'm selling a couple of my contracts right there off my iPhone. Perfect. I have a lot of traders who actually use their iPhone and iPads, and they never sit in front of a desktop. And that's it. So I use this format too to show a bunch of stuff. Sometimes no lines drawn, nothing, just a naked chart with the moving averages and the Bollingers are good enough. And look at this Chipotle right there, just like I told you, when I hit the upper Bollinger, it hit 460 basically, and I said it was going to go to 460, 470. I even, and my longer term charts have shown that 468 was the number I was looking at. So when I went there, what am I going to do? I had a bunch of contracts. I took down a bunch of them. So these are things you guys can do on a real-time basis, and then you can, and I'm providing it, like I said, I'm providing the roadmap. But if it gets there and you're up a bunch of money, and you're up, let's say, $800, $1,800, or $2,000, depending on the number of contracts that you bought, in a matter of 15, 20 minutes, what are you going to do? Just, oh, I'm not going to take it? Of course you're going to take it. So there you are. So I use this format too. Okay. SPX Daily Bull Flag. This is off the iPhone, as you know. And sometimes you see things very clearly when there's nothing drawn on it, right? You guys all agree with me on that? Kevin? Walter? Mary Beth?
Yep, I agree with you.
Yeah, sometimes it's just like looking at this, like, why am I drawing all those fancy technical, tactical charts? Just like do that, but it's not really that true, because the longer term charts, it's easier on the naked eye when you're looking at it. Okay, it's a bull flag. The bull flag could be a nice red one by Sunday evening in a couple of hours, because things are a little bit hot and heavy off the G7 summit, and good old Donald, slammed Trudeau, the Canadian guy, and so now futures could be down 10 points right on Sunday evening, which I think it will, to be honest with you. So does it change the overall trend in the market? No. Does it create short-term volatility on Monday morning and throughout the night? Absolutely. Just the way it is, because basically President Trump decided not to join and sign the G7 communique. So not going to get into the details of that. I'll cover all that stuff tonight. But that's gonna rock global markets a bit. Does it change the overall thing? No, but certainly short term there will be some great buying opportunities. So people like Kevin, who was telling me that he hasn't yet positioned himself, you're going to be in a very sweet spot, kid. All right, very sweet spot to buy some fantastic trades. So These are longer term charts. This is off Thinkorswim. You can see that. Bluebird Bio, we've traded it consistently. And this is a biotech stock, so it moves on different characteristics. This you got to be very patient on. You got to deal with the $5, $6, $7 moves down. Bluebird is one of the finest companies, leader in CAR T technology, which is cancer research. These guys are revolutionizing the world of cancer research. You know, and we traded the stock all the way from down here and lower. I mean, this was one of my biggest winners way back. And this is where we are. Very clear chart, longer term. Got to sit with it. Even a small move from here to here is 13 points on your money, and it just did that just a couple of days ago, last week. Not this week, but the week prior. Moving within a nice channel, and you're just sitting there. No volume here on this minor sell-off. You can see that. And that's one thing I like about Thinkorswim, just so you guys know. And I'm sure you guys do it too, is you can really see the volume movements on that. So on a day, let's say the stock is down $7, you quickly look down. I mean, to me, it's second nature. Like, what's the volume? It's almost non-existent. Is it like this? Very heavy volume, millions of shares, where the stock is pulling back? No, minor. Some hedge funds are going back and forth, doing some little trimming, hedge trimming, right? No pun intended. And basically, volume is important. So Thinkorswim is a perfect platform when I'm showing all this stuff for you guys to look at the volume. Look at this heavy volume, bang up. Then big sellers came in when it jumped from 150. We were there, 150 all the way to 230, literally, right? Big breakout, 2 days, 3 days. So what are you going to do? The stock is up 80 points. You're going to sit there and say, oh, I'm not going to take profits. Of course you're going to take profits. That's exactly what happened. Heavy volume. The hedges basically, probably somebody had 50,000 shares. They're up $400,000. What am I saying, $400,000? They're up $1.5 million on that trade. They're going to take it. So that's what happened. So volume is important. Thinkorswim is a perfect platform to look at volume. One of the best that I've seen. And that's what I use it. I mean, that's one of the biggest features I use. Okay. Give me a second. Let me pull it up. I showed you guys that. Apple. Okay, so this is another example of precision. This was a double for our money on Friday. A little bit more than that. I told people to buy the lottos, which are basically options less than $1, generally speaking, or $1, $1.50, not like $4, $5, $10 options. And I said, let's buy some lottos. Did I just say it at a whim? Nope. Look at how well the structure is on this chart. I'm going to walk you through this very carefully. This is very important. If I can get people to understand just this one chart very well, I think I've done my job, at least for the first intro session. So here we have all these lines, which are your support lines. Now, somebody who's completely new to trading said, whoa, look at that. Apple's going to drop to 165. Remember, this is an hourly chart. This goes back to well, this actually spans all the way from May 8th. Yeah, May 8th all the way through June. So this is monthly, but this is each candle is an hourly candle. That's why it's, it says hourly. So I have these. I noticed that the stock fell apart, right? On Friday because of concerns that they're cutting 20% of the production. I woke up in the morning, futures are down 15. I had done a video cast the night before warning people that we're getting to that point. We're going to get some nice pullbacks. And you got to know both sides. You got to know when you're going to fall off the hill, when you're going to climb it, right? Bulls and bears. That's what we do. And I'm sure all of you got a chance to review that video cast. It was only like 30 minutes long. I think it's one of the most important ones I've done because you need to know what your risks are on the downside just in case the market does what it does. And it's a very critical week that's coming up. Market is very well on Friday. All the trends are in place, but next week is next week. So make sure you listen to that video, and I'm sure you guys have. That was produced on Thursday. So right after that, I was dead right, at least for the first, right off the bat. If somebody, said, whoa, look at that. The VIX jumped, Apple fell. I looked on my, I'm up early, so I'm looking on my iPhone, and I'm like, whoa, Apple's down 4. What the heck happened? Apple's down 4, not a joke. supply concern in Asia, where a lot of chips are made. The rumors from Nikkei Times, they're always spreading rumors. I'm telling you, those guys, they're like, oh, they're going to cut 20% of their Apple iPhone production is slower, so they're cutting 20% of their chip supply orders. Yeah, right. I don't think so. But anyway, um, stock gaps down. These shaded areas are the gaps right there. So here's one gap. Here's the other gap. This was the Friday gap. This was the gap up. This is the gap down. And we've called Apple phenomenally well. Please review my video from a couple of weeks ago when Apple was down crashing every day down to 157. I have the charts there. It was one of our best calls. Okay, Clueless Day Trading's best calls. Every single analyst out there on the street, Apple sucks, their earnings are going to suck, they're going to miss iPhone sales, blah, 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 blah. I stuck to my charts. I had my own opinion based on my experience on Wall Street, what these money managers would be looking at. Value managers love buying Apple when it's falling because they lock into a very fat dividend and dividend rate and what do you call it? And the growth fund managers, the ones who didn't buy Apple at certain times, they love it when it's cheaper. Guess what? We went long prior to the earnings, day before earnings, bang, went up about 160, 170, 180% on those overnight calls. And then 2 days later, good old Mr. Buffett announces that on an interview on CNBC, that he had bought $80 billion worth of Apple. I don't know what the dollar amount was. Okay. So the next thing you know is, bear with me 1 second. So the next thing you know, you have Apple just went berserk. It's not on this chart because it was a little bit before that. And that's from 157, guys, all right? So you can imagine how much money was made for all my members, both swing and short term, as Apple climbed towards. And my charts on Apple are there on the Twitter feed. You can see where I project the stock to go, which is around 204, which is going to be a cap. And at that point, it's going to be slightly above $1 trillion. And they will take that stock up there, believe me. So, whichever the case, Friday. So here we are. A regular service, would be like, that's it, short Apple, it's done. Okay, I'll short Apple if I see my charts break. I didn't see it break. I saw the slow stows making a nosedive towards the oversold levels. Once it's down here, I generally don't short. That's my discipline. Because that's when the stupid shorts are getting into. They're shorting the market, they're shorting Apple, whatever they're doing. And guess what happens? This is what happens. Okay? And they get blasted. And then more short covering, bang, it goes up. Same thing happened with the market on Friday. So this looked in. So I'm looking at my support levels here. I'm looking at the fact that it closed the gap. Remember, this is the gap, right? I'm sorry, it didn't close the gap. I mean, it fell. I'm noticing these. And this is stuff that I go in very deep on my ACS sessions. These things, might seem nothing to people who don't really quite understand my charts, but they're big money, guys. All right? Because these long tail reversals where it looks like a Chinese firecracker like that are big money. Because if you can catch even the tail at this end, you're up 30, 40, 50% right there. And by the time the tail expands, you're up double your money. It happened on Friday. There were multiple tail moves here, and I'm seeing that's nice. And then I drawn this thing previously. The lower arm, lower channel right there. Okay, this is the channel. Don't forget. So let me clean this out a little bit. So here's your channel. Uptrend channel is intact with long tail reversals. Good. I said, okay, let's go and buy some lottos. The lottos were 70 cents, 75 cents, 80 cents. Okay. These long tail reversals just during the day, and this was produced earlier on in the day, was Apple closed at 192. Make sure that I'm looking at one of my other screens here. Yep, 192, guys. So this candle expanded to 192 right here, which also happens to be where this yellow line is. That is your 5 SMA. So this was the trade. 80 cents, not 80 calls, 80 cents. I'm going to put C. How about this? How about, yeah, that's 80 cents. 80 cents down here when I told people to buy it. Not at the exact lows. I was watching the development. And they went to I'll tell you the exact number off my other screen. These were the 190 calls. These are known as lottos. Okay. Expired the same day, so you don't want to go hog wild. I know one of my traders, he bought like tons of them. I think the guy made like $7,000 on this trade. He would not allow me to post his text to me later in the day. And he's a great lotto player, okay, that we generally do on Fridays. So the lottos were the 190 calls expiring the same day. It's all on my Twitter feed. And what day was Friday? Friday was the 8th. Okay, 8. I like the number 8. So 8. So there were 80 cents at this level off this chart. I noticed this was not breaking down. I'd have liked to see it turn around. In fact, this one, which I can't expand right now, this is your fast stochastic. The fast stochastics was actually turning up. So this is all specialized, trading. It's not rocket science. It makes a lot of money. So this fast stochastics was actually if I expand it, it looked like this. It was starting to turn up right as these long tails appeared. And each of these long tails are 10, 20% on your money. I'm not playing options for 20% unless it's a larger amount that I put into something and you want to take out the first lot at 20, 30, 40%. That's fine. If you put $8,000 in option and you're up 20%, you're up $1,600 within minutes. So obviously you're going to take a bit of that out. But generally speaking, on these lottos, I'm not looking for 20%. I'm looking for either 60, 80, or the double. So these babies went from 80 cents to a high, which I never saw, but it did go there. You can check it, to $1.99. Now, lottos move really fast. I'm sure it printed $1.99 somewhere. But most of my sells were around $1.60 and change. Initial sell was around $1.20. That's a 50% when it was breaking out over this gap right there. Took out the opening range or whatever they call it. I don't use the word, okay. But where it fell, where it opening gap here, lower gap. Once it took that out, the shorts are like, whoa, 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 hold on here. The idiotic shorts are like, oh, Apple's not going down to $186 because there's another gap here, by the way. I can see it on my screens. Of course, you got to have quad to see it. So there's a gap here. That's 167. It's possible that Apple could have gone like this and tested that gap. I would be a buyer there because by that time, and it might do that on Monday, by the way. We're out of the lottos. It doesn't matter. We pocketed our money. But it might do that with futures are down big. Apple is going to go to 167.50. I'm sorry. What am I saying? 167. I'm such an idiot. 187.50 because there's a gap here. And this slow stow still hasn't fully bottomed. Is it mandatory that it has to bottom? No. But does it happen most of the time that it bottoms? Absolutely. And I would be a screaming buyer once it bottoms and it starts to cross over. So if it hits this gap at that 187.74 level, that means it's going to be down $5 at the open on Monday morning. It'll be down 5 from the 192 level. It'll be down roughly $5. Short term, screaming buy, because by that time the slow stows will be deep oversold. Doesn't matter what my frigging opinions are, or yours, or your buddies, or StockTwits, or other forums or services that you follow. The machines will short cover, and the short covering is good for at least 2+ points. I'm not saying it's going back to 192 right away. Might do that, but it'll be right off the bottom on the slow stows. Not that hard. So talk about Friday. So it goes to roughly $2 from 80 cents. Percentage, 250% move. That means in profits, 150%. You pocketed 150%. And it's not magic. I've done this many, many times on different stocks. And I even learned it on a real-time basis. So 150% you made just by buying of the strategic clueless day trading tactical charts for that day. So if you put, let's say, I'll like the letter 8. So you put $800. Okay. So, and for, $800, that's actually for smaller traders. That's actually quite a bit of money for a lotto, because if it goes the other way, you're going to lose your 800 real fast. But I'm just giving you an example. So your $800 went to $2,000. Okay. That means your profits are, sorry. So your profits are $1,200. I think you're going to have a nice weekend, guys, on one trade. But forget 800. Let's say you bet 200. Because like I always tell people, always be in the game. So buy 200. If it loses 200, you're not going to be out on the streets. And if you are really going to be out on the streets, if you lose $200, then honestly speaking, you should not be trading with risk capital, which is options. Don't forget, options are risk, high reward. So if you can't afford to lose $200 or $300 or $400, you should not. Till you build up your capital, you should not do it. And if your risk tolerance is that you jump like a monkey on a hot tin roof, known as MOHTR, one of the trademark terms at Clueless Day Trading, then you should not be a trader. Traders have to embrace risk. Just letting you guys know. You can't be like, oh my God, I can't lose $400 because then it's going to be, my account's going to blow up. Well, your 400 could be either $3,000, shown that repeatedly on so many lotto type of trades. Look at Bank of America. Bank of America went from 30 cents, actually it's slightly less than that, but 30 cents to almost $1. That's 200% plus. 2 days on the Twitter feed. So anyway, so your $200, to be exact, will be 500. And you pocketed yourself 300. With lottos, you don't want to go too crazy, because if it doesn't go, there's no certainty it's going to turn around like that. But there's a multitude of factors that were driving the market that day. So there's a classic example. Friday lottos, and this will happen over and over again, just so you know, where Apple's going to open down, then it's going to reverse, and you are going to capture anywhere from 40, 50, 60 to 150%, maybe more. Maybe more. It could be that Apple right now will gap open, if the market decides to gap open at 6 p.m. today, right after 6 p.m. Eastern Standard Time, as the global futures open. Apple will obviously, trades globally. Might tomorrow open up at 193.33 and hit 194, which is again a sell zone before it pulls back again within this range. So lottos, perfect example, 80 cents to $1, $1.99, or you could have bought 80 cents and sold them at $1. Let's say you sold them at $1. But even at $1, you made yourself 25%. 80 cents to $1 is 25% on your money. And probably in less than 30 minutes. Or not less than 30 minutes, less than, let's say, 45 minutes or so. But that's how lottos are done. Now, aside from the lottos, the channel is intact. Either we gap down here, this gap, and as tactical traders, we're prepared for all this stuff. We know where the major support, short-term support level is, which is 185, right there. And at times of volatility, heavy volatility, don't expect me, because it's not humanly possible or feasible, to alert on every single candle. You got to monitor, like I said, MYOT, you got to manage your own trades. And it can fill that gap, because it can look very rapid during times of extreme volatility. But I will show the charts to show where it's totally broken, or whether it's just a tactical dip, a buyable dip, or a tradable bottom, as we like to call it. If it pulls back here, in my opinion, that's a tradable bottom. If it breaks that, Apple's a short. Two with slightly lower levels, 3-4 points. And Apple calls and options are cheap, and they'll move. Otherwise, it's going to it closed here at 192. On Friday, it could just gap up to the pivot, which is this dotted line, and to the upper end of the channel, which will be resistance, which will be somewhere between 194.23 is the short-term top. So somewhere around here, it's going to hit the upper end of the channel. Either it's going to bust and move above that, or it's going to pull back and retest the upper end of this gap again. These are things that algos do. These are things that algorithmic high frequency trading, black box, ultra fast, nanosecond moving programs do. Accept it, embrace it, use my charts to defeat the enemy. Which are the algorithmic programs, by the way? The algos are your enemies. Because these hedge funds know exactly where the stops are, where the limits are, what the other hedgies are doing, what retail traders are doing, where they're getting excited, where they're getting completely panicked, and that's exactly where they're going to act. So by the time you think I've repeated so many times, you're comfortable. That means the price short term is overvalued, and they're going to hit it right there. Now, if it's a channel issue, who knows? They might do that right away, or they'll hit it right away as the market opens, and you're like, oh, I'm going to buy it. And look at Apple's up. That's what a lot of traders do. Just price and volume, garbage. Just watching price and volume no longer gives you that edge that we all had years and years ago, because of the advent of the machines. Rage against the machine, all right? So my charts, that's what they do. So on that note, I'm going to open up and I know Kevin had a couple of questions, and try to keep that, what's it, 11:07. So we have a few extra minutes. So Kev, go ahead with your question.
Yeah, hey Frank. I was just pulling up the Twitter feed. I was trying to find a alert that you made, I think, on Wednesday about SPX.
I'm sorry, on what?
XPX.
SPX. Okay, this is SPX
Yeah,
right
you
here.
said. Yeah, I think you alerted to get into puts, but it was like in an uptrend channel, so I was a little confused. I think you said to get into
Sure.
27
Sure.
put lottos.
Correct. So let me explain to you. Let me first, and that's a very good question, by the way. 1 second. Let's look at some dates. Wednesday was, what's the date on Wednesday? Wednesday was the 6th. So right here, the 6th.
Mm-hmm.
Okay, so 6th was right here. Correct?
Yeah.
Yeah. So let's pinpoint the thing, and then we're gonna move from there. 1 second, sir. So look at the time and the thing here at the bottom. So the 6th started off. This is the 5th. Okay, we are on the 6th here. This is early morning. This is when the markets are going to. This is 2:30 in the afternoon, 3:45 in the afternoon, and this red candle. Please follow. I'm going to make this bigger so it's easier for everyone to see. Bingo. So right here is 2:30 in the afternoon, I believe. Hold on. No, that's early in the morning. 6, 4:15, 4:30, 7:30. My apologies, because it's in military time. So 8:45, 9:45. So this is where it happened on the 6th. Okay.
Mm-hmm.
So right here is the market started. So let's just this was the 6th at the open. Oh, let me change this. Okay, so that's at the open. Do the timeline. Hold on. Come on, baby. I guess I have to redraw it. So this was the open. This was 2:30 in the afternoon. This was 3:30 in the afternoon, and this was, one second, and this is where the market closed, right here, right there. Okay, let's take this out. Disregard this thing. So this is where the market closed. This is where the market opened. This is where the market opened. Big hammer reversals. We traded the calls in a very nice way. Big money. These type of trades are big money. You do recall that we made a lot of money on the upside on the reversal, right, Kevin?
Yeah, I remember.
Okay, good.
Can
And
you hear me?
then later in the afternoon, I said buy some lottos, which would be the hedges on the thing, on the SPX spies. So the reason I said that, okay, there we go, is because at that time, and not just off this chart, because I'm looking at a bunch of other things, right? So my reasoning was, and this is something very important, that's why it's a damn good question, is when I'm saying to hedge, whenever I hedge or use lottos, to which I primarily use lottos to hedge, I'm not going in big. I'm doing it to protect myself just in case there is going to be, based on my readings of the market, and I'll tell you what those readings are just by this one single chart. My readings on the market, that if we do have a substantial pullback or some sort of drop open, I'm going to take that profit out and then go long. So my hedges or my lottos on the SPYs or the SPX, if they're cheap puts, are always less than, always is a minuscule part of my portfolio. During the day, if we are starting to see major breakdowns, I'll go in very aggressive on these type of moves, which I have, and clean out the money. And at that time, if I start to see this big hammer reversals, I'll go in nice on the long side, because at that time, it looks very likely that we're gonna have a short-term bounce. But when we play during the day, substantial candle moves and the stows, just by looking at this chart, are this heavily overbought, there is a pretty good likelihood that we are going to basically have a minor pullback. Now, in a strong market that it has been, those minor pullbacks can be either overnight or they could be at the open. In this particular case, by 7:15 in the evening, futures were down. See that systematic selling of the futures? And then,
Yeah.
The futures basically, let me clean this out. No, we'll leave this alone. So futures actually started to come down. It looked very likely that this level of contact, which was the neckline breakout right here, in the old days, this worked very, very well. But nowadays, the algos are very active in the Globex markets and after hours too. It was very likely that we were going to have a reset like this. Test this neckline. This was a neckline breakout of this V-shaped move, cup and inverse head and shoulder. That we were going to basically pull back here. However, they managed to do that because there was all kinds of news, because there's so much news. There was all kinds of news coming out even on Wednesday after the market, and Wednesday was such a powerful day that it was more likely or not that we were going to have that pullback, which we, by the way, did on the 7th. So here's the instead of pulling back here, it went higher, and we by 3:30 in the 3:45 in the morning, we managed to create a double top, and then the market created a double top. One second. So the puts were alerted always, generally speaking, in a heavy trending move like this, I will alert the puts late in the day. So late in the day would mean somewhere in this zone. Somewhere in this zone. So, and those lottos. So whoever just went in right there would be down on their money at that point, as the market, surged higher towards the close, because this looked like this was going to pull back, but it was simply looks like the shorts got overwhelmed right there. You see that they got overwhelmed, and this candle came in at 3:45 last minute, and the algos which were short, they got blasted. Whichever the case, let's move on to the 7. Okay, these are the overnight stuff. So on the 7th, this is what happened. At approximately 10 o'clock a.m., 9:30, this is where the markets open. The markets created a double top. These are just the opposite of these tails. These are, please look carefully. Look at these tails. They are there. Look at that. So these are exactly the opposite of invert. This is a hammer reversal. That's an inverse hammer or an inverted hammer. Right there. These two, right of the market open. So the ones who bought the puts at this level, and then this candle came in and basically just pulled the puts down on those lottos. This was your hammer reversal. They basically made a ton of money as the market, as I had predicted, pulled back by a sharp. When you get this inverted hammers, you know they're coming in for the kill. The first inverted hammer is 3 candles. It's always like that. 3 or 4 candles. Then a reversal, which means the short's covered. They take in some very nice profits. So the ones who came in here, they would be break even at this level, or as they saw the inverted hammer, this is what I do. I'll buy a few more. So let's say I'm down 40% on those puts. Let's say I'm down 40% on those. And remember, these are lottos, so I'm not putting in 10% of my portfolio on that stuff. I'm seeing this inverted hammer reversal. I'll add more. By that time, my cost basis, let's say they were, just hypothetical example for tutorial purposes, they were $1. So they opened up.
Those are June 6 puts, I believe. So those would have been expired if you were trying to average down.
Why would they? The 7th was a Thursday.
Yeah, but I think you bought June 6th puts, expiring June 6th.
Oh, so you're talking about the intraday ones?
Yeah, not the weeklies.
Okay. So no, so the intraday one. What time? Because I don't remember offhand right now. What time would they? When did I alert the puts? Because
I'm trying to find the tweet exactly, but I think it was around midday, maybe 12 or 1.
Like at this level, as hedges, because I remember playing
Yeah,
some.
I think yeah.
At this level, okay.
I remember when there was like a big resistance line you were pointing out.
Yeah, this one, this big, the big line here, because I do also remember that when we see moves like this, I don't sit around. I take advantage of this type of surge. You know what I'm saying? Of this big surge that came through. So in answer to your question, when it comes to those type of lottos, when we are seeing that type of surge, this move here on this overbought levels, generally speaking, on an intraday basis, if I'm going to buy an intraday lotto, they're going to be damn cheap. So even if they blow up sky high, it doesn't matter to me because the long side is working so well. I'm going to use them as hedges just in case we get this type of pullback and then another surge. I'll be basically taking out my profits at that point. In this particular case, it didn't work because there was another big surge. The market was actually surging, and but generally speaking, on a short-term 15-minute charts, once you get overbought, you generally tend to get a quick reset. And the basis for recommending those cheap puts was to protect our long profits just in case we got that reset, which we didn't because it moved sideways and it surged higher. So that would be the direct explanation of why those puts were put in place. And the other explanation, just keep in mind, is the market is just on the way down when nobody buys the market, and on a short-term basis, let's say here, everybody's panicking, whatever. On the markets on the upside, do exactly the same thing because the machines know that no one's going to be buying this level because they're all scared stuff that the market's like going into a free fall. And when the markets are surging, and I want to say no one, meaning the average retail trader, what I call retail emotional trader, is not going to buy these type of big surge movements because they're going to say it's too high. So whatever the case may be, it's basically an equal and opposite reaction to what the markets generally do. And in this particular case, they wanted to, looks like, and I've been consistent on that, they wanted to take the market up, because our calls, which we bought repeatedly of these levels, have delivered on average. Most of them were in the $4 to $6 range. They have gone up to about $30 or so, 25 to 30. They have consistently delivered, and you should be focusing a lot on those trades too, where they are up 500 to 600% over a matter of a day or two, based on the surges that we see on the market. So that's what the algos do. Even if they're overbought, they will remain overbought, and in some cases, when they're oversold, they'll remain oversold for a good number of hours, not days, good number of hours, whether it be overnight or during trading hours, or they'll stay overbought. So even though from a strict discipline standpoint, I don't want to buy overbought levels, the machines will move past what my expectations are and not follow the standard rule. Just the way they do it on the upside, they basically do the same thing on the downside. So when it comes to lottos, Kevin, a good word of suggestion: you just buy a little bit. If it doesn't work, it doesn't work. But the general trend in all my trades overall, including the SPX and the SPYs, have been go stay long, take profits as they move long, put your strikes up. The ones that we played, the 2750, 2760, I highly suggest that you go ahead and look at the results of what we delivered on that, all the way from especially the 2760s. I mean, forget about it. So I suggest that you also review those, and instead of just this. Now, if your portfolio is that small that you're putting all your money into one little trade, then unfortunately it's not going to work like that. So that's something I can't control. If a person has that, and I'm not talking about you, I'm talking in general. If a person has that limited capacity that they're just going to stick to one trade and thinks that's it, that's the one that's going to completely work and take that account up, sure, it happens. A Bank of America trade at 30 cents going to $1 in 48 hours can certainly take your portfolio to much higher levels. But in actual intraday lottos, you never ever want to put, even how doesn't matter how small your account is, all your money in one trade. Even though, I mean, that's a pure gamble. An intraday lotto is a pure gamble. Within it, I have a technical basis for that gamble. But if it's, if it's going to be an intraday, you got to put in just a small amount. So if you lose it, you're just going to lose your lunch money. That's all. Okay. Next question, Walter, Kevin, anyone? Because we're going to wrap up in about 7 minutes. Now, while you guys are thinking of what question to ask, let me show you a bigger picture here. This is the bigger picture, and this is where the big money is made. All right, guys? And I've been on this for a while now. So let's talk about that while from, let's say, April. This is April 2nd. Every single move that is happening in the markets right now, literally, on a swing basis, not on a 5-minute basis, intraday lotto basis and stuff, has been forecasted, alerted, and have been total bona fide winners across the board on my alerts. This is a chart of the market, the E-mini daily, going back to March 13, the massive crash in the market, 1,200 points. The huge flash crashes, the climactic bottom, not a single trader inside. This is where traders got hurt. And we played this like a fine fiddle, like a fine violin. Not every candle, no way. But I'm talking over a multiple period of days. As I kept on reading the signs, because this is massive volatility, massive. We initially bought here. We traded it here. We bought, this looked like an expansion candle. No, it opened up, took some profits, left some in there. The one that was left in there were down. We bought more here. We bought more here. Up. We got out with very nice profits. Next day, full-scale crash. I think we were caught in this one. Everybody is just like, yeah, I did get caught in this, because this looked like a nice reversal. On this, each candle is a daily, just like that. So It was pulling back. It was beautifully green. Technically speaking, oversold, moving higher. Added more here. Next day, market just goes boom, opens all the way down at that 25.50 level. Fine. What do? Sell everything and run away? Nope. I look at my charts. I look to see what the reaction of the market is on the big opening drop. I look to see whether or not it's developing a reversal candle. That means we're billions of dollars, real money, big money, not like piker money like all of us, right? We're nothing in the big game scheme of things. What it's doing, it creates a hammer. I go in hard. So calls, I can't remember off the top of my head. Let's say they cost me $4 to $6 SPX. They were probably down to 2 or less. I go in hard at these levels because hammer reversal, stochastics are pointing out, and I'm just showing you one chart. I've been looking at a lot of stuff. And this is heavy duty panic out there, okay? CNBC thinks we're going to hell in the handbasket. Retail traders are just like, that's it. They're in the bunkers. Nobody's in the chat room. This is what general behavioral tendencies are. And I'm not here to change that, each to its own. It's just like massive negativity. Mark shorts in the meantime, especially the machine-driven shorts, they're covering. Go in very hard, hammer reversal, we go in, market closes, so we are at that time profitable or almost profitable. The market basically closes down here. Does that mean that I'm fully profitable for the day? No. Does that mean I'm just leaving everything and, oh, guys, that's it, it's over? No. Because I'm seeing that my signals, just based on one chart, is telling me stay long. And if I remember correctly, I added more. And it's up to your discretion, remember. And that's a very important point that I want to make to all of you guys. It is your discretion what you want to do, what your risk tolerance level is, what your reading on my charts are. I'm giving you my interpretation of looking at things. I'm not God. I can't control the market on where the opening fill is going to be. My charts are telling me where the downside and the potholes are, and they're very correct. But I can't tell you whether or not they're going to happen within that exact time frame of a day or two. You give me a couple of days, no problem. I'll paint the picture out. So did that, bang, the market opens higher. I am up huge, and so are a bunch of my traders. One of my best traders is Fish Eyes. If you ever see him in the room, talk to him, private, DM him. He's been around with me for a long time. The guy is probably one of the best SPX traders. You don't even want to know what he makes out and he's not like some billionaire sitting out there. He's an all-American patriot, out from New York. Hardworking guy, gentleman. All right. He reads my charts like I should just create a robot under Fishy's, I call him Fishy's name. I'm dead serious. Guy comes in, reads it. He'll get in there, sit there. He runs an auto shop. And then he'll come in and scale out. Is it that easy? No. But does he make it easy because the way he reads the messaging out of my chart? I think he's one of the only members that I know who probably understands 70% of what I'm trying to show on my charts. And that's a lot. Because a new member probably understands maybe 10% or 20%. And if you understand more, well, good for you. So bottom line is, and then as time goes on, you obviously have to get more of the messaging coming out. So within 2 days, these massive reversals, by that time, I'm probably mostly out here. This magenta line was the 2018 break-even point. I knew they were going to want, the moving averages are not displayed on this chart. But I knew they were going to go break-even for the year, at least. We're not even up that much for the year, by the way, just so you guys know. All right? So for 2018, and it's half the year's gone. What does that mean? A bear will tell you, that's it, it's all over, we're going to be down for the rest of the year. Garbage. I think personally, based on my experience working on the money management side on Wall Street, they're going to make the rest of the year a heck of a lot more profitable in between some heavy duty swings than where we are right now. So if we are break even for June, let's say the market is only up 3% for the end of the second quarter that's coming up on June 30th. Just my gut feeling, based on the money management and how money managers think, I don't think they're going to be like, we're going to be, they want to print at least 6-7% to show on their books. Anyway, that's a different story, and you hear about that stuff on my video. So this 2 candle moves here, good for maybe 400% on the SPYs, or the or the SPXs. So I'll be a very aggressive buyer here. Generally speaking, the retail trader is nowhere in sight. The smart ones are. And you got to start scaling in. You get this big move like that, and there's no pullback. Then you stay long. Then the next day, it pulls down. So you want to stay long. But at the same time, you get 200% on this gap open up. What are you going to do? Just sit there? I always say, if you notice at the beginning, if we are gapping open 5, 10, 15 points on the E-minis, the handles, 5, 10, 15 points, guess what? What do you got to sell the gap. You got to sell at least most of it. If you don't have the capacity and you have to sell everything, well, sell everything. Now, how are you going to use that money during the day to do that? I can't tell you that. That's your business, okay? How much you're trading with. But you generally sell the gap. Then the market, there was pullback, heavy volatility. See that? Another huge buying opportunity. That's when this channel is created, because I need at least 2 points of reference to draw the line. And all through this whole move, this bull flag, which we slipped out of, and I said it tested the break-even 2018 level again. I'm just repeating same stuff. That's all in my videos, all in my Twitter feed. Okay, look for those dates. And that big hammer reversal. This, the minor triangle, all drawn out in multiple charts, and then the breakout. This breakout that not even the biggest of the biggest so-called names on the media and whoever other services you guys follow or whatever you do. And I want, everyone should follow different services, whatever, or if they want to. I don't care. But I didn't see one person who called this bull flag breakout, just the way I never saw a chart which actually drew out this bull flag. That's where the value-added service comes in. Once you get used to my style, whether it be the swing stuff primarily and some of the day trading stuff, which is basically faster traders who know how to read charts very quickly. That's obviously the shorter the time frame, the more volatile it's going to be. But this type of thing, huge. And members who basically stayed long overall, like we all did, not all we did, some of us did, you're talking some serious stuff. Now, at the upper end of the channel, it's the 2800 level. But before that, don't you think we could have one of these? Absolutely. Are you guys going to totally freak out? Most of you will. And if you don't, God bless you, man. You guys are going to be the candidate for the star trader on my service, by the end of the year. I'm going to actually name some star traders. Not name necessarily. I don't know what I'm going to do, but I will nominate some of them. They just blow my mind away how well they trade off my charts. So before that, can we move 2780 down to 200 points on Monday morning? Absolutely. Does that like freak out all of you guys? Well, most of you, absolutely. Does that present a fantastic buying opportunity? Absolutely. And I'll cover all those details on what I think. We'll have an idea of that in a couple of hours after 6 o'clock. So that's it, guys. But so far, the closing on Friday, this was the closing on Friday, re-entry back into the rising wedge over the uptrend line. Everything technically, fantastic. That brings me to my last point. It doesn't matter what the close is like. It does matter overall that it from a technical basis, this is a picture perfect finish. Reversal. I said the Dow Jones was going to go positive when at the market lows on Friday. Went positive in a big way. Why did I say that? Because I just felt it? No, because I saw this. I saw multiple things. I saw the Apple gap, which Apple is, and I saw this reversal hammer right there. Make it bigger and bigger. Right there. A child can see that. And that reversal hammer started to go green. This was blood red, by the way. And if it kept on expanding, I'll be shorting hard. I saw the internals stay up. This is just on one chart. Not to mention all the others that I do. As a pro trader, I'm obviously looking at many different things. I don't expect my members to do that. That's why, I'm putting out my things. And then I saw that this was a supply point. This was a big sell zone back on the 14th of March. That was this doji. That was a doji. That was blood red at the open, like this, which means we had a fair shot to come and test 2744. And this, if it kept on expanding down, we would go down to the left shoulder, which would be down here, 2740, would be a buy again, because that's a right shoulder. That's a left shoulder. You got to understand chart patterns and stuff. Fantastic resources on the on overall on YouTube, and then some specific ones, chart pattern analysis and stuff on my one. Because if you understand patterns and mix in with the way I draw my charts, you're going to get it. You're going to get it very fast. But if you don't understand patterns, sorry guys, you won't get it. Okay, this ain't grandpa's market. This ain't, oh, market's up, volume's up, everything's going to go up. Nope, doesn't work like that. Doesn't work like that. So right now, looking at the overall picture, this is what it looks like, where the market is going to be fully overbought. So regardless of whether we open down on Mondays, too, my gut feeling tells me, remember, this was the high on the market. We ain't going there yet, okay? And if we do go there, that means there's some big stuff going that I don't know, which could be very positive. Can happen. But the pattern completion is this big fat blue line. That's how you read my charts, 2842, if it goes there. And 2842 from where we are right now is we are at 2779. Let's say 2780. So 2842 is basically, to be exact, 38 points, right? No, 62 points. What am I saying? 62 points. 2780. Yeah, 62 points. You guys should know the conversion by now, S&P versus, or E-minis versus the Dow. Roughly about 7 points. That means another 434 points. And we are fully in short mode at that point, in my opinion, short term, because that's where the big volcano erupted and just took out billions and trillions of dollars out of the market. And the retail trader said, that's it. I'm never going to, I just get, the market's just done. And mom and pop said, that's it. I'm never going to put money in the stock market. This market sucks. Because right here in 2018, that's what the dumb money, and we traded this nicely. And I said that, listen to my videos from that time, that this is called wave 5. This is where euphoria kicks in, where you buy something and you're like, man, why did I sell it? You made some hot profits here, 200-300%. Boom, goes up another 400%. You're like, that's it, Everything technically even looks good. This is wave 5. And wave 5 is when mom and pop put the most amount of money, I think $30-some billion. It's not me making it up. It's just in the stock market. And look what the algos do. The reason why you're a clueless A trading, I don't make these things up, guys, okay? It's because we show you on a consistent basis where the potholes and where they're going to attack you. And in this chart alone, it's clearly laid out. So that's it. Walter, do you have any quick questions?
Not from my side, not right now.
Okay, sounds good. Intraday volatility, short-term volatility, unavoidable. That's just the nature of the beast. This cuts out a lot of the noise, the daily noise. I mean, the daily chart cuts out a lot of the daily noise, intraday noise, because it's just a clean red candle or a nice green candle. What happens in between is where traders get messed up all the time. If you're looking for me to be correct every 15 minutes, then you're obviously in la la land. I don't know what to tell you. Okay, but this is the only service that you're in which will show you a guided roadmap. Now, the roadmap will fluctuate. Like I said, it will get there. I have a 70 to 90%, and it's a fact, accuracy ratio, what we call direct hits, where the markets and stocks will go, in stocks that I suggest. But along the way, you're going to take some detours. That's called volatility. Those are the detours you need to manage. And I try to help people as much as possible. But those are the detours that leave you in the dust. And it's happened to many of you over and over again. Leave you in the dust, you sell for a loss, and it gets there. Whether it be Amazon, whether it be Netflix, whether it be Tesla, whether it be Apple, whether it be so many of my trades. And it is difficult. I know that. It's difficult for me too when volatility hits hard during the day. Volatility is meant to mess with your brain. It's a concussion for retail traders. Okay? It just hits you hard. It's like somebody hitting a 100, I'm just making it up, 130 mile plus fastball hits your head. There's nothing you can do. Either you leave the game or you stand there, you're fine, and you hit back. That's what my charts do. So have a great evening, guys. I mean, have a great rest of the weekend. The 8:30 p.m. webinar is all set. This session will be recorded, uploaded to the YouTube channel. Great questions, and I look forward to really, helping you guys as much as I can. But remember one thing: I cannot help people who don't want to help themselves, and I mean that. And the helping themselves part is to try to be intelligent and trying to and use my resources that's on my YouTube channel, on my Twitter feed as much as possible to understand it. Sign up for the advanced coaching sessions. That's the higher level of help, and then we, those, and then you should be good. All right, have a good one, guys. Gotta go.
Thank you.
You too, guys.